We are currently restrictive, and it's stated very clearly in the monetary policy statement in the 4th paragraph, if I recall, where we say very clearly that, I want to give you the exact reference so that we don't make any mistake. It is in the 4th paragraph. We talk about the financing conditions, and we say, but they continue to be tight because our monetary policy remains restrictive. So we are currently restrictive. There is, no questioning in that respect. And the direction of travel currently is very clear. The pace at which it happens, the data that will determine it, the method that we will apply, the meeting by meeting, all of that is quite clear. But, obviously, a lot of ground has been covered. We have already cut interest rates 4 times, total of 100 basis points. We are now, as a result of this decision today, at 3% for the DFR. And we are in a completely different environment. We are getting much closer to target. As I said earlier, our projections for 6 times in a row indicate convergence towards 2% in 2025. We see two-sided risk to inflation. So the macroeconomic landscape in which we make our decisions is vastly different from the days when we were at very high inflation, we had a lot of ground to cover, and risk to inflation was one-sided. So as a result of that, it was completely legitimate and natural to remove that reference to being restrictive for long enough to arrive at target in a timely manner. That is the other word, which, as you may have noticed, has disappeared from our monetary policy statement. Timely. Now, you asked me about... No, I want to finish because you asked me a second question. You said, what about if staff projections is on the optimist side? First of all, I think that they do those projections with a great sense of integrity and loyalty to the facts, to what is unquestionable, and they apply the best judgment that they can in the work that they do. So I have no reason to doubt their projections. The element which has changed and which has been reinforced, as you will have noted also in the monetary policy statement, is the downside risk, particularly downside risk to growth, which is more elaborate in the wording of the MPS. And I think that that's a way to indicate that, given the uncertainty that we have in abundance, it is also the right approach to beef up the risk measurement.